Okay. So conditions of gift relief are donor and donor both must be UK resident. Then they claim the gift relief. Okay, second condition. Gift relief is available on the following assets. When you gift the following assets, then you can claim the gift relief. Which assets you gift? You must have to gift number one, sole trader partnership business, sole trader partnership business assets. Second, when you gift number two, unquoted shares, then you can claim the gift relief. Third, when you gift the quoted shares, but you must have at least 5% holding in the company, then you can claim the gift relief on gifting the quoted shares. Fourth, asset which is immediately chargeable to IHT. Immediately chargeable to IHT when you give to trust. In the IHT, it is called CLT, chargeable lifetime transfer, right? When you gift the trust means CLT. In the CGT, gift relief you can claim. Okay. And number 5, the asset on which APR means agricultural property relief is available. Agricultural property means you are gifting the agricultural property on which agricultural property relief is available. Then in CGT, gift relief is available. You know, fourth and fifth condition is related to IHT, inheritance tax. Okay. On these 5 things, when you gift these 5 things, you can claim the gift relief. Which 5 things? When you give the business, sole trader partnership business assets, then you can claim the gift relief. When you give the unquoted shares, quoted shares in which you have 5% holding in the company. Fourth, when you give to trust, it is called CLT and this is immediately chargeable to IHT. Tell me why CLT is immediately chargeable to IHT? Do you have any idea?
It's a lifetime
Chargeable lifetime.
Tell me, on pet, when you give to individual, in IHT point of view, it is called pet, potentially exempt transfer. Okay, tell me on pet, whether there is a lifetime tax or not?
No.
No, there is no IHT in lifetime on the pet. But there is lifetime tax on CLT, you know, when you give to trust, CLT, you have to pay the lifetime tax on CLT. That's why CLT is called immediately chargeable to IHT and PET is not immediately chargeable because there is no lifetime tax on the PET. Done? So when you give to trust anything, in the CGT's gift relief will be available. Why? Because this transaction is immediately chargeable to IHT in the form of CLT. Got my point? And fifth, when you give the agricultural property in which APR is also a IHT topic. When APR is available on the property, in the CGT gift relief is also available. In these 5 things, you can claim the gift relief. Okay, for example, you are gifting me mobile phone. Can you claim the gift relief on mobile phone?
No.
No, only these 5 things must remember. Shares, quoted unquoted, business, sole
Yes,
trader,
yes, 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 yes.
business assets, gift to trust, and APR, right? For
Mhm.
example, I'm giving you an example here. Father gifted business. Father is gifting his business to his son. Whether father claim gift relief or not.
Yes.
Why? Because business, when you give the business, you can claim the gift relief. Okay.
Yeah.
Okay, father is gifting business to his son. Examiner is saying calculate the tax. You know, when you gift something, you have to pay CGT and IHT both on the gift, right? In IHT, when you give to any individual in lifetime, it is called PET, potentially exempt transfer. Okay, I will told you whenever we do the IHT in future. And you have to know that is when you give to individual in IHT, it is PET. In CGT, father is donor and son is donee, right? So father's DP disposal proceed become market value, and that market value become the cost of donee, right? So father will decrease the cost and he will get a gain. This gain will be deferred through gift relief. Why gift relief father will claim in this gift? Because he is gifting the business, and you know when you give the business gift relief you can claim. So chargeable now gain zero, all the gain is deferred and transferred to donee. If
Donnie.
will decrease the cost of son by the gift relief deferred gain. If today cost is decreased, obviously future gain will be increased. So base cost of donee is calculated son. Whenever son will sell this asset in future, sell this business in future, he will use this base cost and automatically he will pay the tax. Clear?
Yeah.
So when
Yes, ma'am.
examiner will say that you are gifting something, two taxes you have to pay on the gift, IHT and CGT. How to pay IHT? I will tell you later on. CGT, that is the method. Okay. Okay. For example, in I am changing the example now. Father is the person. Mr. A is gifting shares to trust. In this case, gift relief available or not?
No. IST.
Hmm?
Yes, it is.
Available when you give to
Uh,
trust. It is
yeah. Okay.
CLT. In IHT, it is
CLT.
a CLT. And in CGT, you, Mr. A, is donor and trust is
Okay.
donor. When you give to trust, obviously gift relief available to Mr. A because
Okay.
transaction is immediately chargeable to IHT in the form of CLT. Okay, so
Mm-hmm.
gift relief available
Mm-hmm.
and all the gain will be transferred to trust only. Okay,
Yeah.
that's how examiner will test in the exam. Next, and next condition, third condition is gift relief is available on the chargeable business assets. Chargeable business assets of an organization. It is not available on investments. For example, organization means Nestle or Coca-Cola company. Coca-Cola company is a manufacturing company, you know, trading company. If Coca-Cola company has some investments, investment mean for example Coca-Cola company has purchased any other company shares. So that is not related for trade. It is an investment, right? It is not, when you purchase the another company shares, it is not your business, it is just a side investment. Okay. And when a Coca-Cola company let the property and earns the rental income, tell me whether it is an investment of the company or it is related to manufacturing. Hmm?
I didn't answer understand the question.
My question is, Coca-Cola is the
Yeah.
trading company, right?
Mm-hmm.
Coca-Cola let the property to, let means to tenant, and
Yeah.
earns the rental income. Tell me,
Mm-hmm.
is that rental income is related to investment of the company, or it is related to the trade of the Coca-Cola company? Trade mean manufacturing the bottles, Coca-Cola.
Yes, the investment
That is
related to
investment of
investment.
the company. Okay. So
Yeah.
if investments are in the question, then gift relief will not be available on the investment. It is only available on the business assets of the company. So what is the
Okay.
formula of gift relief then if investments came? Gift relief is equal to gain multiply chargeable business assets. Business asset means plant and machinery, land and building, goodwill, divided by total chargeable assets. Chargeable, what is the meaning of chargeable? Chargeable asset means on which tax paid, CGT apply, right? Chargeable mean on which you have to pay the tax, right? What is the meaning of business assets? Business asset means the business assets of the company is land and building. I already told you in rollover and holdover relief.
Plant and machinery, goodwill,
Plant and machinery and goodwill.
goodwill.
And what is the meaning of exempt assets? Exempt means chargeable mean on which tax you have to pay. Exempt means
No tax.
the asset in which there is no tax, CGT is exempt. Which asset in which CGT is exempt? For example, there is a list. There on cash, when you gift or say give the cash to some other person, there is no CGT. Trade debtors, inventory, cash, trade debtor, inventory, these are current assets. There is no CGT on the current assets, okay?
Yeah.
And cars, vehicles, you can say. When you sell the car or gift the car, there is no CGT. Next, individual saving account, ISA is exempt. National saving certificates are so exempt in CGT. There is no CGT. When you gift, sorry, VCT shares, already I told you, venture capital trust. When you sell the VCT shares, there is no CGT exempt. Qualifying corporate bonds. Yesterday we discussed the QCB in the takeover topic. Whenever you sell the loan notes, the CGT is exempt. Okay. And next, price bonds also exempt in CGT. These lists you have to remember these things. There is no CGT. And next, when transfer or gift between spouses, transfer between spouses means, for example, husband and wife when sell or gift something to each other, there is no CGT. For example, husband is gifting the shares to wife. So what is the DP of husband? For example, husband purchased these shares for £50,000. What will be the DP? So no gain, no loss arises. No gain, no loss arises. What will be the DP here now? Cost is 50,000. So what will be the DP? So zero, no gain, no loss arise.
50,000.
50,000. It means husband will transfer the asset at cost. And this 50 will be the cost of Dhoni, wife. Same market value become the cost of 50,000 become the cost of wife. So husband will transfer the asset at no gain, no loss. There is no CGT when spouses transfer to each other. So it means normally you will transfer the asset at market value, but in husband and wife case you will transfer the asset at cost, right? So husband will transfer the asset at its cost, and that become the cost of also wife, Dhoni. Got my point?
Yes.
Yes.
Okay. So these are the exempt assets in the gift in the CGT.
CCT purpose.
Business assets are plant and machinery, land and building, goodwill. And what is the non-business assets of the organization? Non-business means investments. I already told you. Investment means when a trading company, for example, my company is a trading company. If trading company purchase the shares of another company, it is an investment of the company, not related to trade purpose. Or when company let the property and to tenant and earns the rental income, it is also not related to manufacturing. It is a investment activity, right? And next condition number 5 is gift relief must be claimed and signed by both donor and donee. Write down a question. Mr. B gifted unquoted shares, unquoted company shares to his son for 179,000 pounds and purchased it for 63,000 pounds. Value of the unquoted company shares are value of company assets, unquoted company assets are plant 90,000 pounds. Tell me, plant is a business asset or in non-business?
Business.
And it is chargeable because CGT will apply on it. It is not an exempt asset. Land 50,000. Land is business asset or not?
Business.
Business.
And also chargeable because on it CGT will apply, not exempt. And this unquoted company has purchased the quoted company shares for 2,000 pounds. That is, what is this? That is related to trade or an investment of the company?
Investment.
Investment. And goodwill 20,000. Now later son disposed the shares. Later son disposed the shares for 192,000 pounds. Calculate chargeable gain. Okay. You know, father, Mr. B is donor and son is donor. Mr. D, father's DP is market value of the business is 179,000. That become the cost of donee. Market value is the cost of son. Now Mr. B purchased the business for 63,000 pound. Sorry, unquoted shares, and gain will arise 116,000. Now tell me whether gift relief available in this case or not. When you gift the unquoted shares, gift relief available
Yes.
or not?
Yes, available.
Relief available, but how much available? Because in this case, investments of the companies are also given. So the formula of gift relief is gain 116,000 multiply chargeable business asset divided by total chargeable asset. So business asset first is plant 90,000. It is a chargeable business asset. So nominator figure divided by denominator also because it is a chargeable asset. So total chargeable assets in the denominator figure plus land 50,000. It is a business asset also divided by a chargeable asset. Next, investment. Investment is not a business asset, it is a non-business asset. So in nominator figure we will not mention it, but in denominator figure you have to mention to 2,000 because investment is chargeable asset, not a business but chargeable. So you have to pay CGT on it, not an exam. And the next one, uh,
Within.
20,000. It is business asset, also chargeable asset. So in denominator, clear?
Yeah.
So formula answer is 101679. That is a gift relief, and remaining gain will be chargeable now. 14321. You have to pay CGT on it now. And 101679 is deferred. If some cost will be decreased by the gift relief, deferred gain 101679. If cost is decreased today, future gain will be ultimately increased. So base cost of Sun is 77321. Whenever Sun will later dispose these shares in future, we will use this base cost. So Sun will later dispose the share for 192,000 and the base cost is 77321 and the chargeable gain is 114679. Clear?
Yeah.
And you know, gift relief is a relief. You are deferring the gain. And you know, before deferring the gain, you have to, you can consider the 5 planning factors. Which planning factors we have discussed before deferring the gain? Annual exemption wastage, future incomes, future tax rates, future loss availability, and brought forward loss. Have you remembered, girls?
Yes. Yes.
But all these 5 planning factors you will never use in the exam for gift relief. Only for gift relief you will use the tax rates point. Tax rates planning factor only, not 5 all. Only tax rate factor means you will consider the tax rates of donor and donee both and then they decide whether to claim gift relief or not. For example, donor tax rate entrepreneur relief is available. Entrepreneur relief is available to donor. He will pay the tax at the rate of 10%. And donor rate is normal 10, 20. In this case, whether gift relief, when you claim the gift relief, is it suitable or not? Gift relief mean you are deferring the gain. In this situation, deferred the gain is suitable or not? Today rate is 10%. In future, 10, 20.
Yeah, it will be increased, so it's better to charge
Charge now, right?
now. Yeah.
Donor don't want that donor will pay the high tax in future. He must have to pay the tax right now. Don't claim the gift relief in this situation. Whether tax rate is low, you have to pay the tax there. Okay.
One question, ma'am. So is it only for the gift relief we have to seek for the tax section that if it's like
Only for gift relief, tax rate planning factor you have to use.
okay, that's all. Well,
আপু শুনতেছেন?
না
Hello.
ইয়ে করা
Now examiner will
Yes.
ask you a question whether to claim gift relief or not. So you must have to consider the tax rate of donor and donee both. Where tax rate is low, you have to charge the tax here. Okay. And now, for example,
Okay.
today rate is 10% of donor entrepreneur relief available. And a donee also apply for entrepreneur relief 10% rate. In this situation, whether to claim gift relief deferred gain is suitable or not. Today rate is 10. In future also 10. So whether deferring the gain is suitable in this situation or not?
Yes.
Yes, suitable because today rate is 10 and in future also 10. Why not we have to pay the tax in future rate is same, right?
Yeah.
So today you have to delay and in future we will pay the tax at same rate. Done?
Yeah. Mm-hmm.
Okay, next. Write down a question on it. Mr. A gifted business to his son. Mr. A gifted business to his son for 600,000. Cost of the business is 250,000. Letter son disposed the business for 900,000. Both father and son operated the business for 5 years, whether to claim gift relief or not? That is your question. You know, whether to claim gift relief or not, tax factor you have to consider of both donor and donee. Okay, so father run the business for 5 years and transfer it to son. If you will transfer the going concern business and 1 year ownership you have at least, so which relief available? Entrepreneur relief. So 10%.
Entrepreneur.
Now let a son dispose the business after 5 years. It means son also qualify for entrepreneur relief because he have 1 year ownership, 10% tax. In this situation, gift relief is suitable or not?
We can defer.
Yes, you have to defer the gain. So father claim the gift relief, he will defer the gain and transfer to son. So what is the DP market value of the business?
600.
And that is the cost of son, market value same 600,000. Now cost of father is 250 and chargeable gain on the business 350. This gain will be deferred through gift relief. Why gift relief? Because today we are deferring, father is deferring the gain. So 350 will be deferred, chargeable now 0. If son cost 6 lakh, we will reduce this cost with deferred gain 350. If today we decrease the cost by 350, future gain will be increased. So base cost of son is 250. Whenever son will later dispose this asset in future, he will use this base cost. So after 5 year later disposal for 900,000. So now base cost is 250 and chargeable gain 650. Now he will deduct the annual exemption 11,700. What is the taxable gain?
It's 638300.
383.
638300.
That is the figure.
Yeah.
Now apply the tax rate. You know, entrepreneur relief available, so CGT rate is 10%. So CGT payable 63830. Done?
Yeah.
That is a gift relief. Next is incorporation relief. When it is available, for example, incorporation means when you transfer your sole trader, partnership business, it means that is a unincorporated business. When unincorporated business become incorporated means it is converting into a company, right? So when sole trader partnership business is converting into a company, then incorporation relief available. So for example, today you are running a sole trader partnership business and you are transferring this business into a company. It means all the assets of the business are transferred to company. When you transfer the asset to company, on these asset, DP minus cost gain arises, right? This gain of the business assets will be deferred through incorporation relief and chargeable now 0. In return, company will give you the shares. When you get the shares of the company, what is the cost of the shares? The market value of the business become the cost of company, right? For example, I am transferring my business to company and the market value of the business is 100,000. In return, when you get the shares from company, it also worth same 1 lakh. So market value of the business become the cost of company, 1 lakh. Got my point? And when you will decrease the cost of the share by the incorporation relief, deferred gain, so base cost of shares will be calculated. Whenever you will sell the shares of the company in future, you have to pay the tax. So what is the scenario? It means business gain will be deferred and transferred to the shares of the company. Whenever share will be sold in future, then you have to pay the tax on it. Please make the diagram, that is important. So incorporation relief is available when you transfer your unincorporated business, means sole trader partnership business, into a company. Okay. Any problem? All of you clear?
Yes, ma'am.
Just give me 1 minute. I'm writing. Yeah, ma'am, done.
Okay. Now, incorporation is a relief. You are deferring the gain of the business. So whenever tax department will give you the relief, tax department impose conditions. You have to remember the conditions. What are the conditions of incorporation relief? First condition is consideration is in the form of shares. Means when you transfer the business to company, in return company will give you the share consideration. That is the condition of the incorporation relief. Second condition, business must be transferred as a going concern. Going concern business must be transferred to company. Going concern, not seized business, okay? So going concern business you have to transfer into a company. And the third condition is all assets of the business must be transferred to company. Must be transferred to company. So there are three conditions. Consideration in the form of shares. Going concern business must be transferred